Hey traders, what's going on? Jamie Saettele here. It is June 19th, 2018, and welcome to a free webinar. I see some names in here that I haven't seen in a while. Those of you that used to visit Daily FX for the webinars that I haven't done a little over a year. And I do see some names, some members, SB Trade Desk members. So a lot of this information will look fairly familiar to you, of course, but we'll be doing our private webinar tomorrow, and we'll probably have some different things to say tomorrow as we look to take advantage of kind of the fear that's going on here with the dollar rally. I see Amy says hello, miss you at Daily FX. I miss all of you as well. Let me know real quickly before I jump into all of this that you guys can that you can hear me and that you can see the charts. Alex, Dan says yes, it's all good. Okay, so we're just going to get into it. Why don't we start? It's a chart of crude, but we're going to start with the dollar here. US dollar index. We are looking at DXY. This is, of course, going to be mostly euro, right? So 57% of this thereabouts is going to be euro. And just to let you know, I'm going to run through some macro stuff. We'll look at some major currencies. We'll look at some equity indices and some commodities, gold, crude, and try to pinpoint some levels that we want to pay attention to moving forward. So this angle, first of all, what we do here at SB Trade Desk is one of the main tools that we use is what we refer to as slope analysis. So I see a question here from JB Brown asking about the dollar CAD, about thoughts on the trade war on the last 24 hours. So we don't really make decisions based on that type of based on trade war, based on kind of outside news information. Certainly we're aware of it, but our focus really is on the market itself and not so much outside influences. As an example, dollar CAD broke out last week, right, on Friday, obviously before the trade war stuff came up. But we will look at dollar CAD here in a bit, and I'll offer you my take on some levels that you're going to want to pay attention to moving forward. So looking at DXY, as I mentioned, we implement what we call slope analysis, right? So you could call it trend line analysis or angle analysis or median line analysis. It really encompasses the use of trend lines and the pitchfork tool, right? Andrew's pitchfork. So what we're trying to do is simply look for the dominant angle that the market is trading on. And you'd be surprised how precise you can get with identifying turns, and not just turns, but important pivots, important levels. Like you go through a level, expect it to resume, you turn off of a level, expecting that to be an important high or low, right? So in this case, we are looking at a long-term chart of DXY, and we're looking at the 2008 2011 trend line here. Okay, that's what all this is based on, and this is log scale. That's important to note. On the longer term charts, we do tend to look at log scale, right? Short term charts, it doesn't really matter because they're going to be the same whether you're looking log or linear. And it's also, I will also add that it's not necessarily true that on longer term charts that the log scale is always the most important, right? I hear people say that sometimes. It's just not true. I will give you an example with euro as we move on. But here is that 2008-2011 trend line. Okay, this bold black line here would be called the median line or the center line of the channel, and this would be your upper parallel. Okay, up here. So when we were dropping back into January, we had identified this magenta line here, which is simply a parallel to this 2008-2011 line, as one of importance. Okay, so it stands to reason that we are probably going to end up finding the next top or the next, the next turn, however important that turn is. It could be for a couple weeks, or it could be the next big high within a broader, topping process in the dollar. Stands to reason that it's going to be somewhere on an angle that is, parallel to this line, this 2008-2011 trend line. So let's zoom in a little bit and take a look at this. You can see this parallel here, which crosses through the June 2010 line, and here we are 8 years later. Okay, this is August 2015. That was precise support. Spike below it in May 2016. Here we are, June 2016. You can see a lot of, I've already said June twice here, so June tends to be a time, it seems, for some sort of a turn. And then last October, we went through the level and turned back down. All right, so here's what we can do. We've got this line, which we're trading around right now, which was resistance back here in May. We can actually try to get a little more precise with this. So 6 degrees, we know, excuse me, we know what the angle is. So we can try to throw 6 degrees on there and see if we find something interesting. Okay, so just looking at this now, right? Why don't we make that colorful so we can see it? You can see the number of turns that we've had there. Okay, support right here, May 2015. Support, August 2016. And then, of course, the resistance back here in October and November just last year. That's going to be up near the 95-70 region. You've got more stuff up there, right? You've got the low from the spike low from the US presidential election in 2016, right at 95.89. You've got this average, which is a 156-week average, which is going to be a 3-year average, right? I use this more as simply a reference point for, really, really long-term trends, but you can see that you do get some, at times, you can get some pretty good pivots on that. And if we look back even longer term, you can see the 1991 high, 97.30, and support in that region back in 1999. Okay, there's also consolidation up here in June of last year, so exactly a year ago. So doing all of that very quickly, we can simply, kind of ascertain that we've got 2 levels to pay attention to up here for the dollar, right? Simply 95.70 to roughly 95.90 or so, that zone. And this is a weekly chart. If we go daily, you can kind of see it. We could be there in a day. I mean, dollar rallies tend to go into tops, gets pretty violent. So we have 2 levels that we can really pay attention to, 95.70, and if we really go into a blowout mode, then we could be talking as high as the 97.40 region. Okay. Now, what if we turn down, say, from here? Well, this is something that I've been talking about with our members here for a week or so, really, I guess since, well, just a couple days, since last Thursday, right? Since the ECB came out and, Draghi was, I guess, what was it? What do they call it? A dovish taper or something, right? However ridiculous that is. But Euro got slammed, right? And funny enough, here we have just taking out the October high in DXY today. But something interesting is happening here today. Despite the Euro drop, we actually are still above the May low, right? That's a very subtle non-confirmation, okay? And I'm not saying that it's not going to happen, but point being is that if you were to turn down below today's low, right? So say we turn over 94.50, we get below here, outside bar exhaustion possibility, I would, at that point, be willing to kind of go bearish on dollar, not necessarily across the board, but more as it pertains to euro specifically, kind of go euro bullish at that point. So until that happens, until you can take out today's low, so we can basically identify today's low as a pivot is the point. Until that happens, you kind of have to respect upside on the dollar for two spots, first being 95.70 and the second potentially being up all the way up near 97.40. That does seem a bit of a stretch to me, but Mr. Market's going to do what he wants to do, so we got to respect the possibility. So those are two levels really that I think you want to mark down for DXY. Okay. Now we can zoom in a little bit more too. Let's say, what is this? This is a 1, maybe a 2. Is this a 3, 4, 5? So I mean, from a Elliott wave form standpoint, right? We can count something. We just don't know if it's complete. Remember before we talked about that 95.70 to 95.90 region. Well, if we were to do just the simple Elliott measurement of proposed wave 1 equaling proposed wave 5, you're going to get 95.87. Okay, 95.87 is literally the exact spot for that 3-year average. So that kind of reinforces the idea that it's quite important up here, right, at 95.87 or so. All right, so that's enough with the dollar itself, or with DXY, I should say. And let's move on quickly. We'll just look at a few majors here. We can look at euro. I will take some questions after I get through the markets that I'm kind of prepared, for us to look at. But let's go to euro. And euro, as I mentioned before, we have yet to take out this low from May. I know, again, it's very subtle. Not saying that it won't get taken out, but it's important to know that, right? That non-confirmation, it's kind of like Dow theory for currencies. Kenny says, can I have a replay of this webinar? Kenny, you can have a replay of this webinar, and so can everybody else, right? We will have this archived on our website so that everyone can take a look. I'm sure there's people that wanted to watch it that couldn't make it. So yes, everyone can have this archived webinar, no doubt about it. All right, so again, we did not take out the low yet for May, right? Well, DXY has. Again, think of it as Dow theory for currencies, or Dow theory more specifically for euro and for the US dollar. But that's not a predictive, thing. It's not a prediction that this won't happen. It's just that if you turn from here, then it pays to pay attention, because you'd have a condition in place at a turn that typifies, or that is typically seen at an important pivot. So again, simply today's high, 1645. I guess that was made during Asia last night, but today's high, if you get back through that level, okay, then I would certainly entertain or be looking to trade the long side in euro. All right. For how long, I'm not sure at this point, but I simply know that that is a trigger for me. Okay. Let's look at a couple more things for euro. So I mentioned before with the dollar about looking at long-term charts and log scale and arithmetic scale, right? So this is a pretty long-term chart, right? We're going back to 2008, and if I were to go log scale, here's what that looks like. This is a log scale chart of the channel back from the 2008 high. Well, something funny happened back here in January and February. We actually never reached the upper parallel, right? Or the trend line, whatever you want to call it. Now, you did reach the lower parallel back in March of 2015, but let's put on linear scale, If I put on linear scale, you can see that it was reached and therefore identified a very important point in time. Not only that, but the center line of this channel was extremely important, right? This was resistance throughout 2015 and throughout 2016, at times literally to the tick on a nearly 10-year channel, right? That gives you a great deal of information. It tells you that this is this line, just like a horizontal line, right? In slope analysis, we're looking at support resistance on an angle, right? So a lot of people simply think of support resistance as being horizontal boundaries, right? Like this. Excuse my my drawing. I'm not an Andy Warhol here, but support resistance, you're trading through back and forth, right? Markets don't really trade like that very often. They tend to trade, in downtrends, right? And in uptrends. So let me get my paint thing here. All right. Tend to trade in uptrends and downtrends. So when you're trading in, strong uptrend would be with something like this, very strong uptrend. Oops, excuse me, having problems here. So a very strong uptrend would be something like, you start an uptrend, deep retracement, shallower retracement, and then you kind of go on. But all the pivots within the uptrend you can identify with angles. Same idea, right, as horizontal support resistance, just on a plane or on an angle. And that is really what we're trying to do. It sounds very simple. It takes a good deal of work, but that's all we're trying to do, is identify support resistance within the trend. Okay, so in this case, and obviously you're going to have multiple trends at different degrees. Large degree trend like this going all the way back to 2008, you're still on a downtrend. We can go even bigger picture though and say, this is now all the way back really to pre-Euro time. So you're looking at, kind of a amalgamation of the currencies that made up the Euro, mostly Deutsche Mark, right? Back pre-99. And you could argue here that you're actually still in a big uptrend, right? You still have higher highs and higher lows. Okay, now a lot of these long-term time frames are not suitable for trading. It's good to be aware of them, but it's not going to do you much good if you're just sitting long the euro for, whatever you're trying to make money every month or quarter or whatever. Even this is too long term for that. All right, so let's go back to a near-term picture. All right, so this is the daily chart now that we're looking at, and you can see the various angles or the parallels within the downtrend. Okay, and we've actually come upon a very important spot in euro. You can see the parallel here. This would be known. You get rid of some of this stuff, kind of simplify it a bit. Okay. So there's 4 quadrants here within the downtrend, and we can call this, what we do, we refer to this as the 25 line, right? 25% down from the top of the channel. This would be your median line or your 50% line. And then down here is your 75% line. All right, you can see, just a quick glance at this, how many important turns have occurred on the 25 line and the 75 line for that matter, including, by the way, the exact low down here in January of 2017, first day of January, in fact, of 2017. So what about the 25 line? Has anything happened on there? It has. We did have major resistance up there back in October 2014. That was 10/15/2014. I actually remember the day. I do think it was an FOMC day. We had resistance there on the way up, actually last August. and we had support right there in December before we kind of blew out to the top side. So we're kind of sitting on it now, right? So again, just an important thing to pay attention to. Right here, again, everyone's going to trade differently. Some people are going to want to try to catch the exact low, right? Some people are going to look for a little more confirmation. Okay, the way I'm looking at this is that you are on a big level. I know we have the non-confirmation with DXY, so I'm drawing a line over today's high. We get through there, and I've got enough evidence on my side that at least warrants a long position, right? Your risk at that point is going to be relatively tight too, at least on a swing basis, okay? Let's look at something else with Euro. Okay, so let's look at another what we kind of call the original angle. So if we look at the downtrend that has been underway since the high back in February, right? So February 16th, March 27th, we're going to take a parallel to that line, and we're just going to put it right here, okay? This speaks to the tendency for markets to simply to channel, and I can give you an example on the way up. Sometimes you can be awfully precise with this, and sometimes it just gives you the general area. But let's do the same thing here. So again, let's draw the off the lows when we had the uptrend back, that started last year, and we put that on the high here. Wasn't perfect, but you could have certainly constructed some trades or some ideas with this information, right? The topping that was going on here. Some big reversal bars, some big reversal bars. We're actually back to that now. So this really is a huge spot for Euro, and I'm looking for a low. All right, you can probably gather that from the way I'm talking, but I'm looking for a low down here. But that doesn't mean that I'm just blindly long, right? Because if I'm just completely off here, then the Euro could go down for a while. But I do think on a reward to risk basis, and given some of the evidence we have here as far as the market levels are concerned, I'm looking higher. I do need a little more to happen for me to start buying it, but that's the idea. Now let's say we do get another flush, right? We're in a very newsy market right now. The Trump stuff and NAFTA stuff and European stuff, and Draghi speaking about they're not going to raise rates like ever again, or they're going to take their time, et cetera, et cetera. So let's say we do get another flush. Where might this stop? Well, again, this line right here is going to be about 1460. Okay, well, that happens to be right on what I would really consider the retest of, if you call with the 2015 and 2017 lows, if you call that a double bottom, I would really consider that the retest, right? If you remember these periods here, this was August 24th, 2015. There was a huge spike at that point, right? That was the so-called Chinese reval flash crash or whatever. You also had right here in May 2016, right? You had that was kind of a flash crash type of thing. If you remember the narrative or what have you, why this was happening, why you had the euro spike so much, when the Chinese revalued their their currency, or they let it float wider, so to speak, and weaken against the dollar, a lot of those trades were euro Chinese renminbi shorts in the carry trade. So there was a big carry trade wipeout, and it sent euro ripping to the upside. Happened to stop right on the median line, and then we had to base for literally a year and a half more. But if we call this the retest, that's going to be 1460s. Okay. So 1460s, you can kind of just look across the chart. You can see 1460s, pretty good spot. We paused there back in July of last year and then resumed higher too. So I hope that this gives you some good knowledge, at least on levels to pay attention to in euro, and kind of where my head's at, how I'm thinking about potentially trading this if we do get above today's high. All right, let's take a look at cable just real quick. I don't have a lot to say here with the British pound. This is a daily chart. I guess we can go weekly here. Here's a weekly chart. We are looking at the 2007-2014 line. This is another example, actually, of if you were to look at log, you get something like this. If you were to look at linear, it's actually, to me, is more clean, a little cleaner, right? You were kind of consolidating around the center line of this entire channel, right? In fact, your support back in March of last year was right on it, right? You closed the week of the October 2016 so-called flash crash right at it. And now we are at remember our discussion about the 25 line and the 75 line and the 4 quadrants? Well, we are now at that 25 line, and that line, more or less resistance back in September, and then November, December, before we broke to the upside. So we're back at it now. You can also draw a 2017 trend line, right, off the January and March lows, and we're right there. So again, pretty big spot, I think, for cable in general. Okay, let's take a peek at, go to dollar yen first. Let's do that. Okay, so very big picture here. You've got the cleanest 5-wave rally from the 2011 low. Dan says, oh, the abomination. That's right, my friend, the abomination. For those of you that don't know, Mike and I do often refer to, I should say Mike more than me, but Mike Boutros often refers to the Japanese yen as the abomination. Maybe its tendency to kind of stop people out of their trades and then go in the direction that they thought it was going to go. That actually happened to me last week. In fact, I was short at 110.50 and was stopped out at 110.90, which was more or less high tick, and then it tanked. So, it happens. Anyway, looking at the so-called abomination, I have us essentially in a massive B wave that is probably the toughest, toughest wave, or the toughest part of the sequence to try and trade, simply because it can take so many different forms, right? A and C waves tend to be directional in nature. The B wave is the correction of the correction, basically. So you are in a period in which this whole thing could be a triangle, this whole thing could be a flat. That we could have a lot of stuff going on here. It's not the most ideal time to trade, but near term we've got some pretty good levels to look at. Let's go to the daily. All right, so in the daily we're kind of just following the channel back to the 2015 high, right? You can see how great this channel is, all kinds of resistance, the lower parallel, pretty good for support. We can throw another upward sloping fork on there. I'll even go into a 4-hour chart here. So if we draw our fork on the 4-hour chart, there we go. You can see that center line, we're trading right around it right now. And, this is kind of a point at which we need to separate from if we're going to have a trending move of some sort. Okay. By the way, here's another example of the importance of those 25 and 75 lines on the fork. So look at the resistance on the 75 line. Okay, the 25 line didn't quite hit it, but literally a couple ticks off of identifying the low from 529, so-called little panic low there. So dollar yen, again, longer term, difficult kind of environment to trade because it's in a kind of a corrective state. So lack of clarity there, but on a shorter term basis, excuse me, you do have a downward sloping channel to work with. As long as you're within it, I do lean towards looking lower, and would be aware of support probably down near 107.90 actually, which would be a retest of the February high. And who knows, maybe we get down there later this month. If you were to get down there later this month, you'd expect really big support. You'd have, again, the high here. You'd have the lower parallel, which was resistance for the high back on May 21st. And you'd also have the center of the center line of the channel that goes back to the 2015 high, okay? Alex is asking about commodity currencies like euro crosses, yen crosses. I don't think we'll have enough time to go through all of that. I'll be looking at those tomorrow in our members webinar, of course, but I doubt we'll have enough time to look at those today. All right, let's look at the Canadian dollar. So we're looking at dollar CAD here. And we are looking at it on arithmetic scale or linear scale. Today and this week is actually fairly important. So if we look way back, you can see on our long-term page here, this is the long-term members page, and we had, this is back from, I guess, June 1st, had us at huge resistance, right? A really, 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 really big spot. And, at that time, it was kind of like, well, we have to respect the potential for this to turn over. However, if we go through it, you got to respect it. So this is the center of that whole channel. You can see all the precise supports on there. Even this 12 to 2014 trend line, look at all the support that you've had on that recently. If I go to a daily chart, you can really see it. Okay, look at this. May again, the 22nd, 11th, even 226. So now we're back above this level, okay? And if I take us to a daily chart, where's the setup here, right? Buying the breakout right here might be a bit, at least for my taste, a little, kind of chasing it. I, am more inclined to kind of look at this from I want to buy a retest if we get it of the high from March 19th, okay? And that would be a retest of the horizontal level. It's also a retest of the center channel, the center line, excuse me, from the channel that goes back to January 31st. You can see quite clearly, by the way, we're at the 75 line of this channel. So if you were to pull back and get a retest of the horizontal level and of the center line, what you'd have is a setup that actually has a name for it. They call it the, kind of the median line retest or zoom in retest setup. So you get a pullback, watch for support around 130, 125, and then you can try to take this higher up towards the upper parallel of this channel and potentially all the way up to the 618 of the entire decline from 2016. That's going to be a 36.86. Okay, so you've got potential for a big move up here. Going to take you all the way up to this channel, which is old support, by the way. Okay, this channel line was old support. Support back in May of 2015, support in May of 2016. You can see the big wide range breakout bar we had last year and on June 28th. That's all the way over here. And that's actually, if you were to get up there, the intersection for that is at the very end of July. So I'm not talking about this really happening like, right now. Maybe a period of consolidation. Again, a pullback would be in order and a retest of this high at 31.25 before you'd want to take a position here. At least that's how I'm looking at it. But that is what to watch for. The good thing too about all of this is that we know exactly what we're watching for, right? We're not sitting there guessing that day or whatever. Oh man, should I go long or short? No, you gotta be planned out, right? You gotta know what you're going to do, what exactly you're looking for. What set of conditions are you looking for before you can take a trade? Raj asking if I've got a 4-hour chart of the Canadian dollar. Well, we can make a 4-hour chart. Here it is. Okay, so this maybe even gives you a little more color, Raj, on just how important these levels are, right? So here's the center line. You can see that we've responded to the 75 line. So a pullback here would not be a surprise whatsoever, okay? All right. Let's look at some equities, not individual equities, but let's look at some indices, I should say. Look at some bonds, bond chart, longer term bond chart, and let's take a look too at gold and crude. All right, so if we go to I actually want to start with like a really long-term chart. All right, this is like the longest term angle that I will follow. In the US market, we're working off a trend line from the 1982 low and all the parallels associated with it. And the blue line is going to be the center line, okay? So zooming into the recent future, if you will, or more recent future, the last 20 years, you can see that this center line has been major. There's really no other way to put it. It was support after 9/11. It was support on the way up into the final top in 2007. And it was more or less resistance, back in 2014, 15. You consolidated around it, okay, turned off of it. And then you can see after the Trump election, we shot up into it and we traded around it. We consolidated in a very tight range, kind of made this flag here before resuming higher. All right, so it's a good, you want to know where this line is all I'm getting at. So that's going to be down if we were to trade lower at some point. And I don't know what's going to happen. Okay, I'm not here to tell you that the market's going to go here and then it's going to go here and then it's going to go here and there. Okay, I'm just saying that you want to be aware of these levels. So if you were to trade down to call it 21,800, about 3,000 points lower in the Dow, right? If that were to happen, you'd probably want to be a buyer there, at least for a good snapback. Okay, so that for me is what I would call kind of an opportune area, right? An area of opportunity, a place where you'd want to take the other side. There are times to be contrarian, and there are a lot of times, it's not a good time to be a contrarian, but you want to be contrarian at a level this important. All right. By the same token, if we extend the parallel off of the highs from back in 2007, that's essentially where we topped. we had a quick, blow through it, and then we came right back into it. So that was, that was January, February, and we came back and we did bounce where we should have bounced, right? We bounced on another parallel. This stuff can be gold at times. So, we're still within kind of a choppy, rangy market here when you look at it from this standpoint, on the indices. So, your support levels for the Dow, 23,760. You get through there, and then this is really where you probably want to be a buyer if that happens. All right. I mean, we are, by the way, like unchanged on the year, I believe, in the Dow. It's just what's been going on, within this range. Let's go to the S&P. Kenny asking, I'm new in your website and your webinars. What indicators are those on your chart? 50, 200 moving averages. So on a weekly chart, I just look at a 52-week and a 156-week. That's 1 year and 3 years. On the daily chart, I do look at a 50-day and a 200-day. This, by the way, is our S&P chart. We've got, I do these long-term chart updates. So we write once a day, or I do, right? I write once a day. Mike writes once a day. Mike does a couple webinars. I do, some webinars. But then I'll do these long-term chart updates once every, kind of, there's no set schedule. It's infrequent, but it's when I think there's, something that should be said on a long-term basis. So with the long-term charts, all we said on June 1st was just concentrate on 27.85 in the S&P for resistance, okay? That's all we were looking at. We were looking at this red arrow up here, 27.85. So I will take you to this chart right now, and that is this chart. You can see this is the parallel we were talking about, and 27.85 was exceeded slightly. We went to 27.90, not bad. For government work there, and we are looking for support. We're going shorter term here, right? This is not that Dow chart that was so long term. We're looking for support basically around 27.27. You can take this down to a shorter term chart. Why don't we do that? Why don't we go into the short term charts? We're looking at 4-hour charts here now. And we are now looking at the 4-hour chart with the 200 period average on it. So the levels that we probably want to pay attention to, again, 27.27 on the S&P. I would be looking for resistance now, by the way, at about 27.63. And that is a parallel within the uptrend that started back on April 2nd, okay? So that's all we're looking at. We're just looking at this channel, okay? I think we're in a range environment. I don't think that you want to be uber bullish here. I don't think you really want to be uber bearish here either. And you kind of have to be nimble and trade these levels. So 27.63, 27.27 would be, for me, kind of over the next couple of days, probably where to pay attention to. Nasdaq, which has obviously been the leader, you can count 5 waves up from this low back here, from the April 25th low. You got a triangle, A, B, C, D, E, right? A lot of 3-wave movements within, within these legs, telling you that it is a triangle, and we broke to the upside, obviously, of that triangle. I'd be looking for support on the Nasdaq at 2 different levels, right? You can actually see we actually hit resistance and support here over the last couple of days. This is the 75 line within this channel. You can see how perfect that was as resistance on the way up. It was support on 6.8. We have turned down. I am looking for a little more of a pullback here. even though we did just respond to this level. So if we can come off a little bit more, thinking probably 70.36 in the Nasdaq 100 is where you would see initial support. And again, that's going to be on this 4-hour chart and the 200 period average on that chart. Okay, you can see, just look, that 200 period average, pretty good at times, right? On the way up late last year for the big run, hit some pretty good resistance levels on it as well. And finally, your change in behavior back on 5-4. So that's the first level. I would, if you're going to have a really, really, really big run on the upside, like if this is, you know, 1 of 5 or something, then you would probably want to see a little more ink put in here, a little more sideways movement, a little more downside. And if we could get down into the 68.50 area, which would be in the area of the former 4th wave low, also the top of wave D of the triangle, that would really set the stage, I think, for something huge on the upside at some point, right? That would be your 1, and then, you know, 3 waves down for a bigger 2, and then you go for the 3rd wave higher, and just, you know, crazy blowout. We thought this was crazy back here last year, late last year. Then just wait until you get something like this on the downside. People will be scared out of their minds, and the market's going to crash again, and then we go higher. So just for now, we're looking at levels, and that's it. We're looking at 70.36 as a spot. Obviously, I'm not too keen on being short Nasdaq right just yet. It's kind of been the stronger one, right? It's been the leader. So for me, what I'd want to see is something like this. I want to see us first crack something. We haven't broken anything yet. I'd like to see this. Then maybe you come up here and you find some resistance on the underside of that line, which was support and which was resistance, right, back in May and April. So, you know, something like this. And then like that. Okay, so that is the Nasdaq. Why don't we go to bonds, gold, and crude, and then probably gonna have to call it a day for this webinar. Okay, here's the weekly chart of the bonds. It's literally just teetering on the edge here. This is the 1981-2000 trend line. This is, by the way, log scale. The center line of that whole channel, resistance every time except for after Brexit, when we had the, you know, what I would call the major blowout. That was it for the bonds. And now we've come off into, you know, the bottom of the channel. And, you know, from here, my inclination is to look a little bit higher. You know, there's several reasons for that, but, you know, one is the COT, right? If we see COT, especially on the 10-year, I mean, it's just record by a mile speculative short position. I would think that probably has to get wiped out a little bit, or at least neutralize some before you get, you know, before you have the possibility of going lower in the bonds over time. So for me, I do like looking a bit higher. I do like looking up towards roughly 150. Again, that's going to be a parallel within this long-term channel. That was the one that was support back here in March. So that's where my, you know, it's kind of where my head's at as far as the bonds are concerned. You know, if you go shorter term here, go to a daily chart real quickly, you're going to have problems, I would think, around 145. That's going to be the close from 530. You've got the gap at 145.08. So, you know, on a trading basis, probably going to have something, you know, the market's probably going to have something to say right here, right? Kenny asking, do I analyze the Russell? I will look at the Russell. I mean, we'll put up a lot of different charts, you know, in our daily pieces, especially me. I'll look at, you know, different sectors, and you know, we had a piece about even the European financials and whatnot when that whole thing was going down a couple of weeks ago. We'll look at some emerging markets, China, FXI. You know, we look at a lot of things. You know, the concentrations macro, it's always, and the concentration is always going to be, you know, kind of pure macro currencies and some commodities and some major indices. But yeah, we look at a lot of different stuff. All right, let's take a look now at gold and crude. So real quick, just to be summarize here, I do think bonds are headed higher for a little bit. Focus around the 150 area, and 145 is probably going to be a spot in the near term, right? So like next day or two. Okay, crude oil. This is crude. Crude is, there's a lot of, you know, headline risk, of course, this week with the OPEC stuff going on. Crude's kind of teetering on the edge. By the way, not a coincidence that the bonds and crude are both kind of turning, with crude turning down and bonds turning up. Those are both global growth story, you know, stories, markets, right? Crude down, you know, yields down, and you just have to overlay for them, you know, basically overlay a bond chart or yield chart in crude to see that. But this is still a broader uptrend. You could get down to 57 before you go higher, though, right? This is the trend line from the 2016 low. It's drawn off this low because that's when Brent was. It was not confirmed here. It's a lot like the Dow theory for crude oil, right, that we were talking about with Euro and DXY earlier. So focus lower here before I'd want to trade it on the long side. If you look at a really long-term chart of this, this is something that I know the members here know about, but we hit major resistance, and the market, or crude, continues to just basically mimic or follow what was happening after the 2009 low. That's not going to last, right? At some point, all these things stop working. Otherwise, you would have a continuous feedback loop and the market would go nowhere over time, but it's still following it. So, you know, might as well continue to look at it. And what I said before, 57, right? Well, if we got a drop into 57, it would correlate right here. So getting in there in July at some point. So that's what the analog kind of says anyway, 57, and that's where I'm, you know, I have marked down as a major spot to be positive again, at least for a time on crude oils, 57 bucks. If we want to take a look at the shorter term chart here, here we got the, okay. So just be aware, right, this week we've got all the headline OPEC stuff going on. I have us really teetering here on the edge. I mean, this is a level that has been, the angle that is, has been resistance. It's been support, and this goes back to July of last year. You're going back 11 months. So this is not, you know, this is an important spot, right? Just like if you were looking at a stock that was trading at 100 and it kept failing at it, and then it broke through it, and then it came back to it at some point, like, you know, you treat that as an important level. So it's the same thing here. We have a very important angle or an important slope level that crude is trading on. And, you know, there's the real risk of this simply breaking below here. That's kind of that simple. I'll leave it at that, but yeah, just wanted to highlight that. All right, let's take a look at gold, and then I've got to call it a day because I'm running out of time. Okay, so the gold market, gold, here's a weekly chart. Got us simply looking at, you you know, the line that goes off of the 2015 and 2016 lows, and that's a big spot, right? You're also going to, at that point, you know, if we get down into 12, it's going to be 1235 or so if you get down there, right? And that's going to be, you know, right in line, just below, I should say, the December low, okay? You've also got the 200-week average there. You've got the 3-year average of 1241. So, you know, 40 more bucks on the downside in gold before you're really a buyer or want to be a buyer. It's a real possibility. You know, I don't really want to see that happening, but if it does happen, we're probably going to go a little higher in DXY. But anyway, this is something to pay attention to. We're at support now, but if you break it, your next support is not for another 40 bucks. Okay. So really, it is a lot like how I'm looking at the dollar right now, right? And in particular, euro. So, you know, if euro, like we said before, if euro were to take out today's high, right, then you would think about, or you'd want it, or I would want to trade from the long side. You can probably say the same thing for gold, right? If gold were to take out 1284, you'd have reason to suspect that the market's turned, especially after you spike down to 1270 today, which again is this parallel. You've got this downward sloping line. You could have the potential, the keyword, for having some sort of a wedge to work off of. But you know, as long as you're under today's high, I would really, you know, just kind of be a observer here and, you know, watch this market for, you know, potentially a run all the way down to the December low. That's all I'm getting at, right? So again, you know exactly what you want to do, or exactly what you're looking for. You know, above 1284, change in behavior, you know, says the market, you know, could very well move higher. We could have a good low in place. Absent a move above 1284, I would not be doing anything here and wait until they really cry uncle into 1235. Okay. All right, so I am not really going to be able to take any questions here. I'm sorry. We'll do this again. I'll do another free webinar at some point relatively soon, and I hope you enjoyed it. Hope you learned something, and hope you know, can maybe got some insight and levels for some markets that you want to trade. Yes, Alex saying what I like most about your stuff is the cross time frame approach. Yes, absolutely, man. That is you know, that's the essence of technical analysis, right? Markets are fractal, so we should be able to analyze, you know, we should be able to use the same analysis on any time frame, right? If you can't do that, then your approach I don't think is robust, put it that way. Kenny asking, where in the website will I find the recording? Well, I'll throw it on the homepage. We'll have it up there later today, and I will also tweet it out. Okay, so you'll all know where it is. Okay. All right, great. Thank you all very much. Lots of nice comments. Thank you all very much. I've got to run. Have a great rest of your week. Thank you for your time, and take care. All right, bye.